Hey guys, what's up? Alec back with the daily stock market, and look at that. Very interesting day in the stock market. Lots of stocks are down pretty big right now, but we've seen an aggressive day in the stock market to say the least. Most stocks following the same pattern, selling off in the pre-market, going up around 3% midday. And then when the Fed meeting happened around 11 a.m. Pacific Standard Time over in California, by the way, we saw stocks drop dramatically down around 2% and then going back up and plateauing towards the end of the day. So needless to say, it's been a roller coaster of the day. This video is going to be a quick video. I know I always say it's going to be a quick video, but this one really will be. It's just going to be a quick recap of the day. We're going to go over stocks like Tesla. For example, Tesla is down to $155 per share, now at a 52-week low by a long shot, down 60% from highs. Earlier this year, on January 3rd, Tesla was closer to $400 per share. Now Tesla's sitting at $155 per share. If you want a full update on Tesla and electric vehicle stocks in general, go back 3 videos or so on my YouTube channel and you'll see electric vehicle stock market update. That's going to be the one where I predicted that Tesla would be hitting $155 per share when it was closer to $175 per share. Thank you for all the love and support you've been showing on the YouTube channel and the Instagram page. Like this video, share with a friend, and let's jump right into it. Here we can see the S&P 500 ended up down 0.5%, NASDAQ ended up down 0.75%, and Bitcoin was up on the day 0.1%. We see stocks fell after the Feds announced a rate hike of 50 basis points. Analysts expect Feds to raise rates above 5% next year, which is bearish for the stock market overall. So it's interesting because we saw November's CPI disinflation showing, but reaching acceptable levels could mean more pain. 1-2 punch, it's a big week for markets with back-to-back economic headliners events. Today, the Fed meet on a rate hike, and its decision will likely be informed by yesterday's inflation report. U.S. consumer prices, CPI, were up 7.1% in November from last year versus 7.3% that was expected, so it came in a little bit lower. The pace of inflation slowed again from 7.7% in October, showing disinflation. Disinflation is like a balloon that's getting inflated, but at less notable pace. Prices are rising, just not as fast as they were the previous month. Deflation is like the balloon losing air, aka not what's happening now. Deflation is a broad drop in prices and can signal an economic downturn. Expectations. Investors celebrate the report because it raises the likelihood that Feds will hike rates by another 50 basis points today versus another 75 basis point as we had the past 4 times. So that was interesting too, because the last 4 times in a row we had 75 basis point hikes. If we had a 75 basis point hike today, we would have saw the stock market drop even harder than it did. So as 2022 is coming to an end, make sure you message me if you want to get on the close friends list for 2023, because a new year is starting. Everybody's renewing their marketing budgets and their stock market budgets all at the same time. So if you want to get in before a big rush for the new year, message me now. I have early enrollments going on to make 2023 your year in the stock market. But just to prepare you a little bit for 2023, but because 2022 is coming to an end, let's do a recap. In January, we saw the tapering begin, the intro. February, we saw Russia invades Ukraine. It's crazy that was almost a year ago. March, we saw DJ Pow Pow's first rate hike, and that was only a 25 basis point hike, by the way, in March. In June 2022, we saw our first 75 basis point hike ever, which was very interesting. August, we saw the Jackson Hole. End of November, things really haven't changed at all. Looking ahead in 2023, analysts are projecting that it will end better than it begins. Essentially, we expect growth or less of it to be a headwind, but inflation should at least be a tailwind. After all, that's the main way the Feds raise rates, to fight inflation. With the expectations, they can slow growth by slowing demand and thus inflation. So here's what we expect next year. Job softness starts to show up in the broad employment numbers versus just evidence of layoffs and hiring freezes. Okay, more areas that may have taken on too much leverage. Earnings expectations continue to come down to reality. Sometime in the first half, the equity markets flirt with the 2022 bottom again. The S&P 500 around 3550, eventually helping valuations. It's possible we don't go down quite as far, though, if interest rates trend towards the lower end of our expected range. Looking abroad, Europe goes into recession due to the historical Russian energy reliance. China continues to rally on its reopening now that COVID restrictions are generally lifted, which is going to be a big thing to be watching in 2023 is Europe and China, especially China, because they are really opening things up and even relaxing their policies about COVID. But it's not all lost for U.S. stocks. Our own leading economic indicator, below in blue, is showing a potential bottoming. We are watching if it's sustainable. The question is, where is the bottom? I think personally it will come in sometime in 2023. So dollar cost averaging is going to be your best friend here. We can even see the very last sentence says, as a result, we expect a more attractive equity market sometime in the second half of 2023. So end of summer, even midsummer, July, August, could be a good time to start piling into stocks and buying a lot more aggressively. But the thing is, no one knows where the exact bottom is, so that's why it's a good thing to start in the beginning of 2023 so you can dollar cost average in, average your way gradually in, and also gain some knowledge and experience with the stock market and not be a total beginner. Because 2023 is going to be a year where millionaires are made and lots of money is going to be made in the stock market. A lot of people are going to want to go back to 2023 and being like, oh, I wish I bought more of Tesla stock. I wish I bought more of Amazon stock. I wish I bought more of Google stock, Amazon stock, Microsoft stock. So if you want to see exactly what I'm buying personally, when I'm buying, how much I'm buying, the best price points to get in, everything in between. If you want real-time alerts when to pick up the best stocks, make sure you message me on the Daily Stock Market here on Instagram. Now 186,000 followers. And we can see the success that everyone's been having for 2022. 2023 is going to be a huge year as well. This was just a few weeks ago. We can even see, hey, Alec, good call on Apple Put, made major gains this morning, up $200, 85%. Another one up 28%. Another one up 59%. Another one up 58%. Over $1,100 made. And the list goes on and on and on. So if you want to become more advanced in the stock market, make sure you check out my highlight section. Success number 6, success number 5, success number 4, success number 3. Now over 600 positive testimonials, over 2,000 students. And just message me here on Instagram in the DMs. I check every single DM, so I won't miss your message. Send it there asking how you get on the close friends list, and I'll shoot you over an application so I can help you out the best way possible. Thank you guys for all the love and support. Share this video with a friend if you think that they will find it helpful, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.